Hey, Mike Swanson here. We're at the Milano Bistro in Nassau, Bahamas. I'm with Dave Scaricca. He lives down here, and I'm visiting. We're getting ready for a conference in a couple of days. We want to talk about the stock market today because we had this incredible stock market rally yesterday, and everyone's getting excited about it on TV, and it certainly has gone up more than I expected it would. And we saw Kramer say "booyah" at least once. And I know everyone's wondering, does this rally...
I think at least a dozen times.
But everyone's wondering, does this rally have legs to it? And you put out an interesting report to your members, was it about 3 weeks ago, looking forward to a rally, and it looks like it's happening. So what's your take on things right now?
The one thing I really talked about in this report, actually there was two aspects of the market. The first one was, there's a great indicator that Martin Zweig used to write about that it's called the double 9-to-1 indicator. What this basically states is that when up volume outlays down volume by a 9-to-1 ratio within a 3-month period, so 2 days where you get that, without any 9-to-1 down days, usually the market is always higher 3 and 6 months later. And this has happened about 20 times in the past 40 years, and the market's almost always been higher half a year later. Now, that doesn't mean it rallies for the full 6 months, but usually that means at least over the next month or two, it takes off, and then whatever can start a trading range or something. So that happened the first week of the rally. Actually, we got 3 days. And yesterday was unbelievable. Yesterday, that 500-point up day on the Dow, March 23rd, not only did we get a 9-to-1 update, we got a 41-to-1 update, which is probably might be the highest day since 1982, which launched the bull market. Now, I'm not going to say we're going to go on a big, huge bull market, but I was looking at this, and I thought when we were starting to see that, and we didn't see that in the other bear market rallies over the last year and a half, that we might be starting something more significant. And my second point was, if you look at the indices, I look at 30, 40 subsectors in the market, right? And I mean everything from stuff you wouldn't expect, like broker-dealers, home building stocks, healthcare stocks. A lot of these indices weren't breaking new lows when the S&P 500 and the financials were. So I thought that we were seeing kind of a stealth bear market where maybe the major indices were going to new lows, but a lot of stocks weren't confirming. And this is kind of why I went long. And for example, I played the UIG, which was the double financials, and the FAS, which is the triple financials bull. And I kind of, did some good trades in them,
Well, personally, I'm still in cash, and I'm still fairly bearish on the market for the long term. And I'm just, looking to short this rally at some point when I think it's going to come to an end. But with what happened yesterday, I think that's most likely. I was kind of looking for last week could have been the top, and I thought we might go sideways for a week or two, then turn lower. But with what happened yesterday, I think it could go up higher than I thought. Like, I was looking for a top at first around 830, 850, and it may, end up doing a little bit more than that. But either way, I'm still looking to eventually short the market at some point. But most people I know, don't short sell stocks at all, and aren't interested in that kind of thing. And you've got some good stock picks coming out, and in sectors you're looking at to go long. So I think that might be a good resource for some people right now.
Yeah, I think it's difficult for the average investor to go short, because when you go short, let's face it, the average kind of investor is looking more longer term. In that, and I'm not even talking about real long term. I'm talking about, the average person is looking to hold at least for a few months. And a lot of times when you short, you're doing that for less than a month or 2 months or something like that, right? So what I did, I actually had another special report from my members that I wrote, and it's 3 investment trends for 2009 and beyond, right? And basically what this report is, it's one is kind of a trend and the other 2 are stock ideas. These are investments that I think will do well regardless of what the market does. I think these are solid kind of fundamental investments. Sure, if the market had another big downdraft, they would probably get hit a tiny bit. But these are something when you come out of all this, are doing well. And for example, one of them has a new product line, pays a very high 7-8% dividend, and is actually up about 40% since I recommended it in the last month. So I'm looking for a pullback in it. But this is kind of the material and the work that I do on top of that. And in terms of the market, you're talking about the rally, I'm kind of on the fence now, because I think we could see a bear market rally that could end in April. But the one thing I've been tossing around again for my members in my newsletter is I've been plotting the NASDAQ since 2000 on top of the Dow since 1929. And they're tracking each other exactly the same. Both had a 2 to 3 year 90% bust. Then both had a 5-year reaction, like the Dow from 32 to 37, the NASDAQ from 2002 to 2007. Then both had a very vicious 1.5 year bear market. 37, 38 in the Dow, and 2007 to 2009 in the NASDAQ. And basically what happened at this point in 38, 39, there was about a 50% 6-month rally in the Dow, which took the Dow from under 100 back to over 150. So if that kind of thing happened in the NASDAQ, and the NASDAQ's about 1,500 right now, it could go back to 2,000 before rolling over. And it would do it, it'd rally throughout the summer. So I'm kind of on the sidelines. I don't know if this is just a 1 or 2 month bear market rally, or this will be a larger rally. But one thing I can guarantee you, this is not the start of a major 3 or 5 year bull market. At the very most, you'll get like a 75, 76 bull market where it lasts for a year. At the very, very most, right?
What would you say then, like for someone who wants to go long in some new stocks or holding positions or whatever, they got this rally, and at some point they probably should take profits?
Oh, totally. I think if you...
Probably just move the stops up or something to get to that point.
But let's say this 38 scenario plays out in stocks. And remember, even the 1929 crash saw a 48% rally from the fall of 29 to the spring of 1930. So every bear market in history has at least seen that kind of rally. So let's say this is just that kind of rally. That would again put the Dow back over 9 or 9,500 and the S&P probably over 900, right? I think that if you're a longer term investor, I would look to be selling into a rally like that rather than holding, because where I believe that we're getting, I'm probably not quite as bearish as Mike. Where I think we're heading is you look at the market, what it did from 76 to 82 or the 40s, it's just a lot of up and down and back and forth movement, not a bust, not a bull market, not a boom, and it goes nowhere for 5 to 10 years. And that's personally where I think it is. I think that if we're sitting here at a Milano Bistro in 10 years, we could still see the S&P at 900 or something, right?
Well, if you look at a scenario like that, where the market averages are basically going nowhere over the next couple of years or whatever, there's still, if someone wants to make money in that, they have to be real selective and be in the right sectors and the right stocks. It's just like holding your mutual funds ain't going to do you much good.
Well, and again, this is kind of where my report, that 3 investment sectors or trends, I try to outline 3 things that I think will be like investments that will outperform even if the market is kind of flatlining.
Well, we should probably wrap this up. Before we go, do you want to remind people that are coming here or down here that we're having the investment conference? Wednesday, that's tomorrow night.
Yeah, Wednesday the 25th, we'll be meeting at Atlantis. Then our conference is the 26th, 27th, and we're going to have a dinner at a very nice Italian restaurant on the 26th. And then we're going to come here to the Milano Bistro and have a party here on the 27th. So it's going to be a fun conference. We got 5 speakers, guys like Bill Murphy, Tom Calandra here, another newsletter guy named Victor Gonclaves. We got 5 junior companies coming to present their, to present themselves, and like I said, then we're going to just have a lot of kind of networking and fun afterwards too.
Yeah, so if you're in the area, come and meet us.
Come and meet us. Yeah, it'll be a lot of fun.
Yeah, we'll be talking to you later.